survive this. In fact, I think we've done quite well already, 14 months after the crisis. Well,
Great.
I'm happy to see judge and the arbitrator sit together. My question is about in England. I'm not sure when banks have dispute. Is there a trend that more and more disputes come to arbitration or come to the courts? Since in China, in recent years, more and more banks prefer to choose arbitration as the resolution of disputes. Since for some complicated cases between banks, for example, a derivatives dispute, Shanghai local bank deal with this dispute for 10 years. So more and more banks feel maybe some for cause cannot deal with the complicated financial transactions very efficiently. Thank you.
I think it would be fair to say that about 10, 15 years ago, banks would not even consider arbitration, at least in the UK and the US. Things have changed quite a bit, partly with Islamic finance, then with the collapse of the Lehman Brothers. I mean, China, indeed, there is a special arbitration institution for financial disputes in Shanghai. And in Hong Kong, the Hong Kong Arbitration Center has specific arbitration rules, which they call them the Lehman Brothers rules, which is sort of dealing with financial crisis. And of course, in the investment arbitration, where banks have invested abroad, they have really brought a number of claims in investment arbitration before the World Bank Center for the Settlement of Investment Disputes. So we see certainly a new trend. Of course, there was the suggestion coming from the World Legal Forum to create an international financial tribunal based in The Hague, which is actually something that the Dutch government sponsors quite handsomely. But I think institutionally that's a very difficult concept to see being implemented very, very fast, because even if there is funding for that, I can't see how such a jurisdiction will be introduced without some sort of international treaty. But certainly the banks are now speaking, and Queen Mary is actually at the forefront. There was last year at the initiation of the International Swaps and Derivatives Association a meeting with banks in Germany to discuss arbitration in the banking sector. And there will be a follow-up meeting in London, of course, by Queen Mary sometime in early 2010. So there is certainly momentum there.
I think, if I can just add one word, I think it is probably correct to say that there is an increase in litigation involving banks, I would say, since the beginning of the 2000s. Although, to testify this properly, one would need to carry out some kind of methodologically sound statistical analysis. Overall, my feeling is that there is less litigation in banking than in other areas of commercial law. And this is, A, because when it comes to wholesale actors, banks vis-à-vis banks, or institutions vis-à-vis institutions, they prefer not to litigate. And when it comes to consumers, there are relatively effective alternative dispute resolution mechanisms, ombudsman systems, not only in this country but throughout Europe. I think it's quite interesting, for example, that Equitable Life, which was perhaps the most important scandal, if I can use this word, in the financial services sector in this country, generated a lot of decisions by the ombudsman, but not really decisions by the courts, very few. And in a way, it's quite telling that the law of misrepresentation has, at least in financial affairs, has developed in this country mostly through the ombudsman and the Equitable Life affair decisions.
Time for one more, I think. We've got to finish. Say something at the end?
Hi. So we both talked about how the sort of the interconnectedness of the financial system has been a weakness, and how we sort of had glimpses of that before the current financial crisis. If you just sort of assume for a moment a bit of a fantasy, if that you were, in charge of reforming the system in a sort of regulatory and structural manner, you have sort of infinite political will, you could do what you like. What would you see as the major steps that would be most effective to be trying to that people should be trying to take at the moment, and assume for the moment that you could do anything, and what would you think would be the most effective things to undertake?
Well, that's a very good closing question, which will enable me to ask our panelists what they would do.
I think there are two things here. What one thinks that generally the regulators can do, and I think there are two things that can be done. One is regulation of specific areas of law. For example, hedge funds, which so far have been unregulated, I think ought to be subjected to regulation, and indeed there is a good progress to this effect at European level. Secondly, I would increase more generally transparency. I think a part of the game of capitalism really is that the consumer has the chance to know what is going on. And a lot of these financial instruments are not sufficiently transparent. I think there is great improvement that can be placed there. Third point is international cooperation. I think to avoid systemic risk, there has to be more cooperation among regulators at the international level. One of the reasons why perhaps the response to the crisis was slower than one might have hoped is because the channels of communication among national regulators have not been as streamlined as they ought to have been. Now, if it comes at the micro level, as it were, what Queen Mary can do as an institution, or what we can do, I think it's a number of us have taken, or indeed at the moment, members in law reform committees, both in this country and internationally, all take part as non-executive directors. And here I would like to sound what Lord Collins said. Some of these financial instruments are so complicated that the role of the non-executive really becomes a real challenge. At least I have found personally. And continue to advance themes that we believe on, and themes which I think will try and make a better society insofar as they can.
My reply will be much shorter, because I think first Tridimas' reply was quite comprehensive. I was always puzzled by the fact that certain financial instruments like swaps or indeed hedge funds, if one wanted to explain it to somebody like a student, would have to use rules of gambling. So if that was the basis of making profit, which has been the practice for a long time, at least in swaps and hedge funds, there was something in the system which was facilitated very quick return of the investment and high profit, but no one was prepared to take the risk. And I think that's something that banks need to be taught, that if you take high risk, you have to take it.
I see. Isn't all investment and insurance gambling? Thank you very much.
Thank you.